in this market, Tom, if you look at a chart of the NASDAQ, it feels like things bottomed out around June 16th. And then we had that huge rally in July. But now we're back to tech rolling over. What have you seen in terms of exchange-traded funds and how people are reacting to what we've seen in the NASDAQ and this rally in the month of July?
Yeah, absolutely, Maria. The story from the beginning of the year, the first 4 months, people were selling growth. They were selling long bonds. But since the low in June, they're back into growth in a big way. Almost $10 billion came into the top 3 S&P 500 ETFs. And when before they were all into short duration bonds, they're buying high yield again. They're buying corporate bonds in a big way. And that's really been good from a sentiment standpoint. From a technical standpoint, we got really close to hitting the 200-day moving average on some of the major market indicators. It kind of faked it and went south. But if we see that happen in the coming weeks, especially before Labor Day, that's going to bode well for the markets as we get into the fall.
Yeah, I mean, look, you could look at these charts and look at technical moves. Certainly, Tom, I'm really glad you did that. But you also want to look at fundamentals. We got an economy that is slowing. We've got Fed raising rates. The Ukraine situation was a nightmare for the IPO market as well. If you just want to look at the impact on business and the death and destruction that we know of. Ryan, what about this IPO market? We're talking about the worst year in 2 decades, even though Instacart is one of the few companies moving toward a public listing as soon as this year. Instacart, your thoughts, and obviously the banks have talked about this freeze in the IPO market. When is that going to start thawing out?
I mean, it really depends on the Fed. And Dennis, you're looking very angelic and all white this morning. I appreciate that. It's talking about the Fed being very hawkish going into the fall, and they've taken the punch bowl away. The party's over for all these IPOs that were going out. I mean, just put in perspective, last year this time, you had $100 billion raised in IPOs for the year. We only have $5 billion this year. So, Wall Street's tolerance for companies that have no earnings, may have earnings out like 100 years in the future is certainly going away here. Instacart's a great example of this. They were valued at like $39 billion. They're now only valued at $24 billion. So you're seeing your valuation cut in half. No one wants to go public in this environment. And I'll say this, it's always a horrible time to buy a company when it goes IPO if you're a retail investor. The retail investor always gets caught holding the bag because typically that's when the numbers are the best. That's when owners are looking, saying it's time to sell because our pipeline doesn't look as good. And this is what happens. Typically IPOs underperform for the next 5 years. And that's what we're seeing now. IPO market's down like 40% this year. It was down 10% last year. So I think it's going to be a long time before we see those animal spirits come back. I think the IPO market's going to be dead for quite a while.
Well, and we saw that in a lot of the banks' reports, their earnings reports, right, Tom? I mean, the capital markets part of the business were the weak spots. It was really the consumer side of the businesses in the banks' earnings that really were the star performer.
Well, it is. And what you know, Maria, is banks do much better when rates are higher. Preferred-related ETFs have actually been attracting a ton of money lately as yields in some of these preferred ETFs are up 6 to 7% annually. So you've got an equity play and you've got a fixed income play. These are some of the things that financial advisors are looking for today as they're diversifying away from more of a bearish allocation that they had a year ago.
Okay, we will take a look at that and what it means for the rest of the year. Look at this market, having given up much of the earlier rally. We got the Dow Industrials right now teetering on negative. It is exactly unchanged at 33,056 on the Dow. The S&P is up just a quarter, and the Nasdaq higher by 2 3/4. Just in the last 15 minutes, that big rally that we saw in stocks is fading. We'll slip in a short break and check out why. Dennis Gartman, Ryan Payne, Tom Lydon, great to see you this morning. Thank you so much for the word on Wall Street. Much more ahead this morning.